on a wall.
The biggest business stories and newsmakers when you want to watch them. BNN's Video on Demand for your smartphone and tablet. Watch on your wireless device at bnn.ca.
We have a couple of things that happened this morning. Of course, we have the GDP numbers here. And in the U.S., I should note, and I know Tony Keller and Pamela Ritchie talked about these numbers this morning, but personal spending was up 0.3%. That was a little less than expectations, but personal income was higher than expectations and higher than personal spending. So you had a little bit of a lift in the savings rate. Well, see, the market actually is taking that not too badly here this morning in the U.S., although the futures are a little lower. Our next guest says this week's trading will focus on Canadian large cap earnings, the ECB rate decision, and Friday is another big day. Can't believe it. Payrolls around the corner. Diana Avigdor, Vice President and Head of Trading at Barometer Capital. Good morning, Diana. It's actually a kind of a big week in jobs at the end, but you mentioned these three things. One is earnings, because they're coming to Canada this week.
Yeah, I think when you look at the market lately, has been a lot of little subtleties that we need to pay attention to. Of course, the earnings have been excellent, and so we're going to be watching for these large cap earnings. In the U.S., I'll just give you a data point, of all the mega caps that reported, 84% beat. When you bring in the Russell 1000, that number drops to 70. So it's been a large cap outperformance. Apple, you know, all the mega cap brand, dividend paying and growing type of names. So we have Suncor and Talisman and Canadian Oil Sands and Bell on Thursday. These are going to be very important for Canadian market. We've seen on the trading desks some buying on the large cap oils in the last week or two, some rotation from some winners into some of these Talisman, according to some technicians, has been in a 9-month basing period. Suncor too has kind of gone up $2-3 the last few weeks. So there is some bottom picking in these large cap oils, hoping that the earnings will come in okay.
Are you seeing it in the large cap golds as well, or the miners? We've got Barrick this week. We've got First Quantum this week.
Yeah, I've seen some interest in the golds. Last week's M&A, the merger, put a little bit of interest underneath some of the juniors, but I'm not seeing a lot of activity in the golds. We are concerned a little bit on the telcos. We've seen some flows on the telcos. Rogers, not so good numbers last week. Wondering whether this week's Bell on Thursday is going to, what's been Rogers' woes might be Bell's win. So we'll see. It looks like it may be, as Rogers lost on some key components, that we think Bell is winning on. And also we've seen some interest in the REITs again.
And they've been a huge mover. I mean, they've been a great place to be.
They've been a great place to be, and there's been a little bit of a scare, say about a month ago, when interest rate conversations started to talk about our interest rates going up, and of course the REITs do best when in a low interest rate environment. But they're reporting again, some of them this week. Last quarter too, they almost every single one of them beat, and we think that might be the case again. So.
And in the interim, so we have a lot of earnings, big earnings week. We have the ECB decision.
We have the ECB decision on Thursday. And here is another subtlety from a European market perspective. So we have issues again, and it's a macro problem, and it's true. Same like last year. But the difference this time in Europe versus a year ago is that we're not talking about solvency now. We're talking about austerity and growth. It's almost comic to say that we can handle a recession, but we don't want insolvency.
Yeah.
So we're working through some of these things. And it's okay. I mean, if you were wondering why the euro is sitting at 1.3220 at times like this, with Spain and Italy rates so high, this is probably why, as they're working through their numbers. So the ECB data, we don't expect any change in rates, but we will be listening for Mr. Draghi's commentary.
And then the big number is Friday.
And then the big number on Friday, and you know how I like to look at the Citigroup Economic Index, Surprise Index, and the data has been coming in very sloppy, and that index has been really coming off, and the market is cherry picking those data points that it wants to look at in order to stay at this 1400 level. The silver lining underneath that economic surprise index is that if you compare it to last year's trajectory, it's the same trajectory, but at a different pace, and it's a bit reaching. We need to see these economic numbers come back. We need to see these economic numbers do well. It's great to have great earnings, but you need the data to support it. Employment, housing. On the housing side, we see housing stocks are making, some of them are making new highs, so there's something good going on. And as one of my colleagues said in the morning meeting today, he says, I'd like to see this market continue. I have my foot on the brake pedal, but I'm not pressing yet.
Oh. Just so people know, non-farm right now, 164,000. That's the consensus. Kind of being whittled down. We were looking at, plus 200,000, and then we got last month's number, and that got people nervous
Yeah,
again.
It's true. I mean, the jobless is the other side of the equation on the employment. It speaks to, some of the components speak to the participation rate. And so you can have you can have an unemployment rate come in, but then the bears will say, well, the participation rate has dropped. And so it altogether works. Let's not forget that we've gone from 10% to 8 and a bit. Mm-hmm. So, and the seasonality, this warm winter, I think it's putting people a little bit, a little confused. How much seasonality is in the numbers? How much can you use seasonality as an excuse for either good or bad numbers?
And
that seems to be
people are using both sides.
Yeah, and they're using both sides.
Yeah.
And when you look at the GDP number on Friday, we've seen consensus. We've seen a consensus miss. We've seen an excellent a consumption number at the expense of lower savings rate. But the disparity between the numbers on the GDP, when you look at economists at 1.5% and some others at 3.5%, we see a consensus great, but there's a big range around it.
Yeah.
It's not always like that. So we're sitting in between two camps.
Bringing it back to Canada for a second, you said you started to see a little bit of interest coming into these big cap oils, maybe the Suncors. Yeah. Have you seen interest, because they are reporting on Thursday, Manulife, any interest in the insurance companies here?
So. I think Manulife, I think people still think that Manulife has to chew through some of their high hedging costs. And that they will do okay if the market continues to do well. Mm-hmm. The question is, will the market continue to do well over the short term? So I'm not seeing that much interest in Manulife, though if I had to pick what people are interested in, probably more Manulife than Sun Life.
Oh, okay.
We're talking, there's been very quiet on the bank front. Interest has been a rotation away from the telcos into some of the REITs, but it's been rotation. It hasn't been new money.
Yes. And is that the biggest problem with this market generally, do you think?
It is a bit of an issue from a volume perspective. And again, though, here we have a subtlety. Volumes. I think the HFT activity has peaked. I think some of that takes some of the volatility and some of the volume that we've been used to. If you smooth out volume over the last 5 years, we're not so bad, but we're certainly not used to this now. And it's a stock picker's market with correlations at lows again.
Right. Okay. Thank you very much, Diana. Always
My
good
pleasure.
to hear from you.
Thank you.
Busy week?
Busy.
Diana Avigdor, Vice President and Head of Trading at Barometer Capital. We got some analyst actions coming your way after this quick break. We'll look at the Asian markets. Japan was closed last night. Hong Kong, big gain.